Simon with toughtrader.com. Wanted to do a review of today's trading. So it's Monday, it's August 20th, and so I've got a bunch of new people in the room. I've got some older people that are trying to get consistent with their approach to trading. And so I'm not sure I like the camera angle the way that it is, but I'll work with that as I can. So a couple of things. When we come into the day, the first thing that I want to know is what you're looking at is a market profile chart here. And what I want to know from the market profile chart, and before I get started, just really quick, past performance is not indicative of future results. You can lose a lot of money trading futures. Please, please, please know what you're doing, guys. It's awful to lose a big chunk of change for no reason whatsoever, and it's totally unnecessary, right? Take a deep breath. Learn the art. You don't have to move that quickly. You can move quickly once you know exactly what you're looking for, and then you can work from there, right? There's no need to blow yourself up. So number one, this is going to focus on ES, not on bonds. I'll do a separate trade review for bonds, which we also are trading in the RIM. So number one thing that we look at when we come in the day is, first of all, on Friday, we closed near the high of the day. And in a market profile, I'm going to try to break this down as simple as possible. And I list this off in the morning in the preview, and I'll go back through it. This area right here, where it's no longer blue, right on that line right there, that is 28.50.50. The first rule you should have written down in your trading journal is if you don't get below that 28.50.50, there's really no short available to you unless you make a big extension up, number one, right? Number two, where's the likely target for that upside move? Well, when we look to the left, I know if I don't get below 28.50.50, I can't move lower and re-examine where we spent the majority of the day on Friday, right? So the next piece that I want to go back and look at is what's untouched above. And what's untouched above comes into this really a 3-day composite and a value area right through here. And what you'll see is, what you see from that area is that number one, this was the scene of the crime. We gapped down away from and then started to move all the way down towards 2,800 from this point. That goes back to the 9th of August, right? Secondly, we closed right underneath there on Friday, and we actually traded all the way through and back up into that value area low that had been untested, right? So notice what I'm doing. Instead of looking at price and trend lines and things like that, I'm really slowing down my pace even when I look at the market, number one, and I'm asking, well, what's the market trying to do? So just like I built the evidence beforehand, which was we had a long bias. My goal was to get long at 28.50.50. I was unable to do so because it never tagged it, but that was my goal today, right? My goal was to not be short unless it was blaringly obvious that the market had set up short, right? And what are the reasons for that? So I'm going to list them. Mondays and Fridays are the narrowest range days of the week. It's August, it's summertime grind, and it's hard to get big rotations in either direction. But if we're going to get a big rotation, it's highly likely that unless we trade below the top of the prior day's value, that grind is likely to be upside. So that's a huge advantage to you, just simply to start the day off with, because you're already going, okay, not below 28.50.50, not even a little bit below it, no reason to consider the short. So that gives you an edge to start off with, right? Next piece of evidence, and I build this piece of evidence every single day, whichever market I'm coming in to look at, I build the evidence the exact same way. So I'm going to come over here, I'm going to erase all my lines, right? And I'm going to go, okay, first of all, we gapped off the low, right? Secondly, this area right here was where we consolidated. We're above this area, right? This is real simple stuff that anybody can do just to figure out. I know that if we were weak, we would have never gotten back above those 3 days, right? We spent 3 full days consolidating in that area. The first thing that I noticed from Thursday and Friday is that both days closed. See where those little orange arrows are? Both days closed above. So the first thing that tells me from a bigger picture standpoint is that I've got to get underneath to make a big move lower. I've got to get underneath kind of right there from 28.44 to 28.42. If I'm not below that area, and just like if you look at any technical technical analysis book, they're going to draw a line that looks similar to this. You break out, you come back for a backside test, and if you hold that backside test, you then continue rallying to your next resistance area, which right now is sitting right here. If you were to draw another block, you'd say, okay, we spent 3 days in that blue area that's highlighted is where we spent, that's a TPO, which is a profile based on time. The ones to the right are profiles based on volume. Okay, and I prefer TPOs over volume profiles, but I think volume profiles are also very, very powerful decision-making tools. Okay, so next part of the breakdown for us is we knew you had to get above in order to truly break out. You had to break above the swing high. That brings us up to 64 to 61 and a quarter. And this is all just from recent area. And what have we done? We came up to, if you look at where as we rallied, right? So let me erase this so you can figure out what other participants are thinking. And look how mechanical it is. First, we came up to the low. Then we came up to the last piece of what's called the value area low from a TPO. And now we've come up almost, we just missed this, to this area right here, which is the value area high. We're just shy of it. That's 6150. That's 6150. And that is 6150. And we have not tagged it yet, but you've got to get above that and consolidate. And then the last piece in that would be the 6375. Okay, so let me slow this down and explain how this works so everyone understands. The first thing that I'm saying is that starting on this day, we started one timing to the upside. One timing simply means that based on whether you're looking at a 24-hour chart or a regular trading hours, which is New York Stock Exchange times, 8:30 to 3:15, we were simply unable to trade by even one tick below the prior day's low, right? Why is that important? Because often when you are trading to the upside, what indicates that there could be a change in character is that ability to have the trade go one tick below the prior day's low, and it indicates a change in character, and it shows a reduction in the amount of momentum we have to the upside. I'll give you an example of that so you can see it and understand it, and then you can go look for your other examples when you're trading. You'll notice on the second, we started one time into the upside. Notice an inability to trade below the prior day's low. Notice that on the 8th, we were able to trade below the low of the 7th. That set up the balance day. We then gapped down, right? So total change in character from straight up to gap down and balance. And then we rolled to the downside, right? And now we've started this one timing characteristic back up. So in order for me as a trader not to step in and get bone crushed on the short side, I pay special attention to this because it lets me A, relax on pressing my short side trades, and B, look for where the larger opportunity is, right? I'm gonna say that again. It lets me relax about worrying about the short side trade. I'm gonna keep trying to look for it. And B, when it does stop, I can start looking for opportunities to see if we're either gonna start trading sideways or start rolling back to the downside. And you'll notice most of the time, and of course, what most weaker traders will do is they'll go and say, well, I'm afraid I'll miss the rollover altogether, and I have to keep shorting all the way up. But the whole advantage to having a small account is that you're not moving billions of dollars. Hope maybe you are, but most of us aren't moving billions of dollars. Most of us aren't even moving millions of dollars around, right? So you can wait for this period to end here, and you still end up, if you want to be short, with plenty of opportunities to get short for the roll to the downside if that's what you're looking for, right? Let's roll to the next point, right? Okay, so for today, if you look at how this lined up, and I'm going to break this chart down so everyone can see this. First thing I know is I need to get below 28.50 and a quarter to be short. Next thing I know is I'm going to have some resistance right here at 57, 61, and then this was such a tight range, also 59 and a quarter, right? So I'm going to take that chart and I'm going to duplicate it. And I'm going to change it to a 5-minute chart. And then I'm going to make it a ES session only, that's already US session only. Okay, now I'm going to break it down. Okay, so look how we came in the morning. My first question I have when I gap up, right, So there's a couple of things that had to be accomplished. We had to get below that value area. We had to get below that. Let's spread this out even further. I apologize. There we go. There's this morning's open. So number one, 28.50.50 right here is what I'm pointing to. That was Friday's value area high. If I don't get underneath this, you can see that it was double tested on going into Friday. It was also overnight tested if you look in the overnight session to the tick and sprung back up. If I don't get underneath this, easy for me. No short. Short does not exist. Now I'm looking for longs. The goal was to get long actually on a tag right here. We didn't have enough energy to do it. And I didn't make the adjustment quick enough to get long here. I'm going to explain that why in a second. Okay, next what you'll see is this 28.57 to 28.59 served as resistance all day long. And you can see we pushed up initially and rejected. This is important for newer traders to understand. And you go, well, wait a minute. If we were in resistance, why didn't I want to short out of the 57 to 59 location? And the answer to that is pretty straightforward and easy. Okay, your odds of getting a major rotation down without clearing that 50.25, 50-50 area were very, very low, right? Secondly, even if you had shorted it, look how long it took to make the rotation, even to approach it, was the first 2 hours of the day, right? And the biggest danger is if you catch it the wrong way on an open drive higher, you can end up with a situation where it just simply gives you a quick rotation down and then drives through resistance immediately. I don't like trading the first half hour. I think it makes it's easier on traders if you simply skip that first half hour. And if you wanted to short, there were some clues to short. I simply didn't want to short in my room. When the years of experience in coaching people one-on-one, when I can get them to reduce the amount of trades they take on the short side dramatically, I want to say that again. When I can get traders to reduce the number of trades they take on the short side dramatically, their P&L goes up almost immediately, right? The rest of the stuff we can work on finding what their best long setups are, but their stops, their agitation, and their frustration drop dramatically. If you want to short, there's better markets to short than the S&P 500. You can certainly look at oil. You can look at wheat, any market that's dominated by just a single product and doesn't have a spread of 500 different products that have a predominant cash flow to the long side. Even bonds are an easier trade to the short side than the S&P is. Okay, so for the day, you can see the majority of the day over there. That resistance held almost all afternoon long, and then you can see we finally made one little squeeze right over here to 28.60. That was the very top of that value area. It missed by just a tick. And then you can see at the end of the day, even there, you couldn't get a major roll to the downside. And what this tells me now for overnight, right? So how do I take that information? What I would have liked to have done when I wrote in my journal is I really would have liked to have found a way to have gotten long there, and I didn't do it. Why? My plan was to take a long at 28.50.50, and it didn't have enough energy to get down there. And that just simply goes down as I missed my entry and I don't chase up. And on most days, that pays me dividends. In summertime, it doesn't because it just grinds so hard, right? But now we have a new piece of information. So now I'm going to show you how we're going to carry this over. So if you're watching this, you can look tomorrow and go, well, how's that piece of information? How's that piece of information going to help me going into tomorrow, right? So we're going to do something here real quick. If we take this chart and we're looking at tomorrow and I want to short, the first thing that I'm going to recognize, let me kill this, I apologize. The first thing I'm going to do, right, is I'm going to come in and go, okay, here's my value area low for the day, right? These are simple things. I didn't invent this. This is all Dalton's work, right? And there's my value area high, right? So number one, I know that if I'm trading between 28.60 and 28.55 inside of value is going to be chop. I expect slow, tight, two-sided rotation, much like you had like on this day right here. See how this kept swishing back and forth as it spent all day right up until the very end of the day inside of this value area. See how it just keeps whipping back and forth, back and forth. This can be great if you're a scalper, but it's horrible if you're trying to make a position work for you and get a stretch because they forced you to wait all the way through the end of the session. And then when it finally closed for you underneath value, that's when you got the extension to the downside, right? So for tomorrow, I'm writing in my notes right now, 28.55 and a quarter, 28.60. I expect two-sided trading there. That makes my day instantly easier. I know that I can look for extensions, big extensions up above 28.60. I know I can start to look for extensions down below 28.55. That's number one. Number two thing, in order for the market to truly break down, I need to see it close or get below and trade below 28.51.50. So there's a rule of thumb in that 28.51.50, and this is that rule of thumb. I'm going to tell it to you right now. That rule of thumb is that usually the first time below prior day's low, we snap back in, or the first time above in your one timing to the downside, the first time above that high, we tend to snap back in. It doesn't tend to go. The exception to that rule is if we gap away like we did here, right? So I'll give you, again, I'm going to take you and give you examples of that so you can go back and learn for yourself. Again, this is all about, in my trading room and in the way I train myself, it's all about learning from what has already happened in the past, taking those lessons, integrating them into my mental framework so that I have a good expectation and a good understanding of what is likely to happen going forward. Okay, so where has all this happened before and where can I get a good example of that? So number one, on the 7th, we have great examples. We can go look right here. On the 7th, we stopped one timing to the downside on the 8th. What happened? We opened up, we pushed below prior day's low, snapped back in, and then we proceeded to bounce between value area low, the point of control, and the prior day's low, and we just bounced in between there. So the first time below there, people got a little bit exuberant about the short. They got trapped and squeezed all the way up from 28.54 all the way back to 28.60, only to watch it come back all the way back to 28.54, which is typical, right? Okay, next part of that formula. So now we've stopped one time. So the thing that I want to see there in order to get committed on the short side, so I'm going to drag you through here so that you can see what it looks like, what this might end up looking like either way, right? And the best way to do that is through example, right? So what I'm going to do here is I'm going to take you, I'm going to go, okay, value area low, value area high, right? Both of those are there. I'll usually color them, and then come look at this day. So when I open up, the first thing I would have said here, I'll stretch out these days. So these are 30-minute bars instead of 5-minute bars, which is what I actually trade off of intraday. Drag it back over. But the first thing you're going to notice is we opened up an A period. We tested value area low. So if you immediately got bearish, guess what? You got squeezed all the way up into C period, right? We tested all the way through the range and poked our head out. We then closed back into value area high, right? You see in that D period, traded all the way to value area low and poked our head right below. Again, if you're chasing trades in this environment, you're getting stopped left and right because this is a balanced environment in which we haven't established above for, you see how this period closed here? We only had one 30-minute period close above, and we had no periods closed below, right? And I'm going to show you why that's important. So then what happens? We push to a new low. It's balanced still, right? The market isn't ready to roll over, and they squeeze them all the way back up, where once again, we've squeezed out of range. And you'll notice that these rotations are pretty small rotations, but they're enough that if you're an impatient trader, they're totally causing you losses on both ends of this formula. We then roll over, and now we have closed underneath. So what I'd be looking for in that Asian period, and I bet if I go back and look in Asia overnight, we would have tagged that 28.55.75. I bet we hung up there right up until London, and then we rolled over. That would be my bet. That's how I would have wanted to trade that. And then if you look at the following day, right, how that got treated, we gapped down, and then notice from that gap down, if we look to the left, this becomes important, right? If we look to the left, the area that's been untested, right? Let's see if we can fix this. Okay, the area that's been untested, if we look to the left, see how we gapped all the way through this day's trading range, and see how we already tested this old value area high right here. which was what ended up acting as support for the push back up. There's the value area low that's been untested. Notice we open up, we test right into that old value area low, reject out, excuse me a second, we reject out of that value area low, right? And then we come all the way around. I'm going to break this day out. Okay, we reject all the way out. Notice that we come back and we test. There's a naked point of control right through here. And then we come all the way down and we test between this old value area low on the third, and there's a naked point of control that needs to be taken out. The market is really a very mechanical place, and if you take it step by step, it really acts pretty logically, right? So we gap down, and then instead of thinking, well, we're going to go to zero, what you should be thinking is, where are the next untested major areas that have been established previously? Because it's pretty rare that we just rip those areas up and destroy them, right? And that's what my trading is all about, is I'm constantly thinking, I'm not thinking, well, is the market going from 2865 to 2800? Because I know it's not going to do that in a day. All my focus is on getting that centered for what's it going to do over the next hour. I really like to be done with my trading by 1 p.m. if I can. So what am I going to center? What am I going to center my trading on during those hours, right? So if you look, all we did in this session is we gapped down, we tested up to a value area low that had been untested. We just barely missed it. Notice that it comes up and actually tags it, rejects off, right? Failure to fill half gap, failure to fill the gap, consolidation underneath the prior day's value area for an hour. We use this as resistance, right? We've already taken out this point of control. And so the next thing on your chart when you're looking on the 10th is this value area low. You will see we traded to it. We bounced off of it. I can tell because we set a high. This was the low of the bar. That was the high of the bar. It had to bounce. Test underneath for about an hour and a half. Failure to remain underneath. And then we squeeze all the shorts up in the afternoon because that's what the market likes to do, right? So when I'm looking over here, and we can build the chart together so that we have a good idea of what the market may or may not do tomorrow, right? So let's just do it together. It's pretty easy, and it helps get a good grounding for how you're going to make your trading decisions moving into the following day. So if you look at for tomorrow, same chart, right? First thing I'm going to note is there's a naked volume point of control right there, 28.72 3/4 to about 28.74 1/4. For me, that's the big target above, right? So the first thing that has to be done in order to make that happen, we can ask these. We have a pretty simple measure for tomorrow morning when I walk in, or even in Asia overnight tonight. I'm going to spread this chart out just a little bit. Again, this is the chart I'm going to post to clients tonight. I don't have any issue doing that. And I'm going to go right there. That's today's value area high, and that's today's high right there. I'll color that green. And I'm going to go ahead and do my homework while I'm doing it with y'all, so I teach y'all. Next, value area low right there, 28.55 1/4. That is the value area low. So the next thing I'm going to go and do when I'm setting up for my homework for the next day, right, is I want to ask myself, well, where are the support levels below that have been untested? And something jumps out at me, boom, almost automatically, right? When I look at it, I go, hey, this value area low has been yet to be untested, right? So I'm going to mark it off. So now I have some pretty good areas to look at. I know that I have prior day's low right there. I marked them off in green. So now I have some pretty good pieces of information just to give me an idea. So first of all, my first question that I have is we closed it. It looks like we went out at 28.5875 or 28.57 1/4. So 20 up brings me up to 28.77 roughly. So this is my upper limit approximately. I'll put a little square up there. And then if I know if I look 20 down from 57, that brings me to 37. And I usually want to overshoot that little area by about 10 points. And I want to be pretty familiar with what's going on in those locations so that I can know where I want to take my trades in those areas, right? So the first thing that I'm looking at is I know I have to be, so I'm going to write in my notes, I have to be below 28.55 1/4, and I want to consolidate for at least an hour underneath there to be short. Secondly, I would like to see us trade underneath yesterday's low to know that the shorts are okay to take. So just being underneath 55 1/4 depending on your aggressiveness, you want to see if it can trade underneath. Third, I know the first day that we trade underneath when we've been one time into the upside usually snaps back in. So where's it going to snap back in from? Well, right underneath this value area low, there's also a hole in the profile here to the left that's accompanied by what's clearly a low volume node in the TPO. You got to know that both the volume profile traders and the TPO traders are going to be looking to find responsive buys in there. Next, I have an untested value area low. I'm going to write that down at 28.35. Hash that up. Okay, I know that I'm likely, okay, so again, I'm not going, that's 28.35, I'm long. I'm then going over to my algos and my chart setups to look for longs in these areas, right? All of this getting connected. And then finally, in between here, what's important? The first thing I'm going to note is that there was a ton of time spent right there. See that 28.57 1/4? It's likely to act as a magnet. I'm just going to have it as a single point. And there's the settle price at 28.57 3/4, right? So what I mostly want from this area is I don't want to trade in here at all. I don't want to trade in that 57 1/4 and 58 area at all. Why is it that I don't want to trade in that area? Because I'm going to end up getting ping-ponged. I either want to see it reject and get below 55 and have the inability to get back above. I don't want to get chopped in this area. I either want to focus on that 60 for 60, 60, 75 without a close above and a rejection down if I'm super aggressive on the shorts, right? Or I want to see us trade below 55 1/4, and maybe if we trade to 50 1/4, look to be a responsive buyer at that 50 1/4 for where? To come back to 55 1/4 because it's the first day below, between 50 and 48 1/4, depending on the speed of the market. If the market's really slow, 50 exactly. If it's really fast, it's going to be 50 to 48 1/4, and I have an algo that helps me set up for that. Then lastly, if we get underneath that area, right, what you're going to see is there's a naked TPO point of control sitting right here. Now here's the trick with that. The volume point of control for that day was not in the same place. It was up here, and it's already been tested. It's at 28.51. These tend to become weaker when they're separated, so I'm just going to mark it off that it was the TPO point of control, but I'm not going to want to trade it. However, it's also at an anomaly right there. So I go from not wanting to trade it to trade it. I need evidence, which is why market is yellow. I need evidence that that's going to hold a support. That would be from 57 to 42. That would be roughly a 15-point rotation down. In a slow market like we've had, particularly if we don't gap down out of this location, I would expect a response back to where? 48 1/4 to 50.50. And then if it gets trapped back above 51, back to that 58. And then finally, all the way down here, I would expect a response from that 28.35. That is approximately at 28.35 from 28.57. It's a 22-point rotation down, and that's where I would expect the response back up. If we consolidate above 28.60 tomorrow, I want to go back and look to my left really quickly. And I have to go way back to find that. And the first thing that I'm going to note is my old swing high, which before we had the breakdown was right here at 28.6375. I'm going to note that as the old swing. Then I'm going to have to come all the way back probably into March. And let's make this a little bit faster. 28.63. There we are. There we are. 28.42. Wow, we had to go way back here. I may not have it on the, there we are. And finally, when I come back here, what I see is I have an untested value area low at 28.68. And an untested value area high at 28.76. That's probably about as much energy as we have to move to the upside going into tomorrow. And the important thing here, guys, is when you're trading, right? All of these are what all of this is giving you when you look at it as a as a whole, and you convert that to a tradable chart, is now you go, okay, I have very specific areas. I know what the potential range up and down looks like tomorrow. And now I have very pinpoint areas where I can write out my trade plan and look at where support and resistance are, right? And then what I do, which I'm not going to do right here, is I go look at the intraday development, market internals, the deltas that are being printed through the course of the day. And then I can look and go, okay, if we're consolidating above 28.60.75, I'm going to go 63.75, 66 and a quarter, 72. Those are my upside targets, and I'm going to scale along, looking before I initiate for a dip down against value area high to grab that long into this area for a push back up. Conversely, if I get underneath 50.50 and I find for some reason that we can't trap back above, I'm going to start looking below 48. I'm going to target 43, 42 to the downside, and then ultimately 35. That's how you lay out your trading day so that you have high odds of making money. And then what you need, and this is really important, most guys don't get it when they show up. You got to understand whether the playing field is fast or slow. In today's market, here, I'm going to move this really quick. In today's market, if you look at this as a net, these are really small. This is my algorithm. And these are really small bars. These are 1.5 range bars. And the rotation from 28.60 back to 28.51, yes, it was a decent rotation, but it took you all morning long to get the rotation down. And then, unfortunately, what I was trying to get, it was just underneath here. And just so you know, what I should have done is I got a great delta divergence right into my anomaly at 28.51.50. I should have taken that long. I didn't. And my target would have been VWAP and then possibly the end of the range. At any rate, I was off by a point on that trade, and I don't chase up. And we did not short all day long. So net, if you want to be a profitable trader long term, you don't have to trade every day, but you do have to have an understanding of what the market should look like as you're looking for a trade. And I'm going to give you a great example of this. Someone who I follow, who I really respect, a good trader, said that the auction looked complete when we got up to 28.60 and expected a rotation back to 28.57 and 28.56. And I want to bring a point up about that 28.57, 28.56 area because it's really, really important. Had you been short up here, first of all, it took forever to get this rotation down, and you're in the last hour. We hit that 28.50 around 28.60 around 1:30, and it did rotate down to 28.57. You did have 28.57 and a quarter. You had hypothetically 2 to 3 points in the trade. What I find with a lot of guys is they get anxious as they're trying to trade, and when they're shorting up here, yes, sometimes it works, but when you have buyers in complete control of a market, too many times you end up getting run over in a short squeeze at the end of the day. Even guys here who are trying to hold on for that, if they missed their 57 scale, they never got 56, but they missed their 57 scale, they got pushed out. If they had to stop 2 ticks above the high, they got stopped out, right? And you'll end up emotionally defeated when that occurs. I thought it would have been easier to simply buy rotations back into VWAP for a push back up towards that 28.60 level. And I still feel that way. At the end of the day, really important, we got this biggest delta of the day right there at the end of the day, that 5,000 delta. I would expect if in early Asia we test up into that 59.60, that we will find rejection out of there for a test back to value area high, which came in at, before I mention that, came in all the way at, now I've lost it. Hold on one second. We'll find it. Maybe. Here, I'll just go back to another chart. If we push that 28.60, my expectation is you still have to get below value area low, which is also 28.60. That's interesting because that's also value area high and it's that delta. If we actually reject off that 28.60, I would expect the 28.58 to be your target. It's 2 points. And then if you get underneath that, then value area low at 28.55. It's just all cluttered up there. That would be, but I would be inclined for a tight stop if I saw a rejection there to take that 28.60 in Asia only for a test. On the other hand, if we gap above or drive above 28.60, I look for backside tests in that 2860 to push towards 66 in Asia. So I have no idea what they're going to do, and I never do. I always trade based off what my algo tells me and where my support resistance levels are and the appropriate rotation. So anyways, my name is Simon. I run the Tough Trader Room. If you'd like to join us for a couple days, or you'd like to learn how to become a consistent trader, contact me. Send me an email to tradertough@gmail.com, and I'd be more than happy to help you out. Trade profitably. Don't be in a rush to get to trading. Once you know what you're doing, the money's there, right? And you will find trades, setups, and situations that both fit your personality, your risk profile, your ability to manage risk, and your ability to take it on and off in an appropriate fashion. And most importantly, remember, in day trading, you can't trade one contract forever. You have to build size as you move along, and that requires consistency. Anyways, have a great night, guys. I went way longer than I planned to. I'm out of here. I'll talk to y'all later. Good night.